We have Daniel Berenbaum. He is an analyst at Auriga USA. He's got a buy rating on the shares of Intel, not on the rest of the semiconductor stock group, though. And also on the telephone, we have Ashok Kumar, managing director and senior tech analyst at Rodman and Renshaw. And Ashok used to work at Intel. He's got a market perform rating on the stock. Gentlemen, welcome to Taking Stock. Dan, it's good to have you with us here in the studio. 52 cents versus 50 cents, obviously very good. Is this because of the server business? Do you think that that is where the growth is coming?
Well, I think that really has something to do with it. I mean, the quarter itself wasn't that much of a surprise. I mean, there was a negative pre-announcement, so the mystery was sort of removed from Q3. The really interesting thing about the report to me was the guidance. Now, revenue was guided up kind of about 3% at the midpoint, maybe a little bit better than people were thinking, but gross margin was actually guided up to a 67% midpoint off a 66% result in Q3. That's much better than generally people were thinking. I believe that that profitability, as you was talking about, that profitability indicator is because of a better mix shift to server, which is typically more profitable.
Ashok Kumar, what about this mix, this shift to the higher margin Nehalem chip for data centers and for servers? Is that the big takeaway here, the gross margin?
Yes, and I think the company is, reported profitability as well as forecasted profitability is well above the target range of 55 to 65%, and as indicated, it's a mix shift towards the higher end. And I think that's going to be the tailwind for the story on a near-term basis, given the weakness on the consumer side.
Ashok, what about the takeovers recently, McAfee and the wireless business at Infineon? How does that position Intel for the future?
Yeah, the McAfee, from a financial perspective, is going to be neutral to the bottom line on a near-term basis. In terms of Infineon, we think that's more of a strategic acquisition for the company. It positions the company in the fast-growing and very large smartphone opportunity. Assuming they do execute and integrate this transaction well, they could potentially be a key competitor for Qualcomm over the next product cycle.
Daniel, what should we take away from this report and apply to the rest of the semiconductor sector? Because you've been a little bit sober, at least in your analysis, saying that when we look at PC shipments, when we look at shipments for laptops, these are not turning out to be blockbusters, and that's one of the reasons why you like Intel is they've got that higher margin server business.
Exactly. I mean, these are, if you put it in a seasonal perspective, realistically, these are not great numbers when you think that Q3 and Q4 we should be seeing sequential revenue numbers up 6, 7, 8% for both Q3 and Q4, and you're really not seeing it. You're seeing very muted results. So I think that Intel is seeing that very specific tailwind from the Nehalem products for servers we talked about. I also see some worrying signs for other types of semiconductors. We're hearing about slowing in distribution, which speaks to more broad-based semis. So, I think that Intel, both because of a relatively low valuation relative to the rest of the group, as well as that product cycle that will keep profitability looking better, that's why Intel is more interesting to me than some of the other stocks and semis.
Now, the shares were up about 1% in after-hours trading. Do you still like the stock of Intel?
I still do like the stock. 1%. For a semiconductor company around earnings to only move 1%, that's a very boring day for us.
All right, let me turn to you, Ashok. What about the actual stock? Does this indicate to you that the entire sector is going to have some difficulty exceeding estimates for the quarter?
Yeah, specific to Intel, I think valuations are very compelling. 10-time forward estimates, 3% dividend yield. The sentiment is neutral to negative. So I think for a long-term patient investor, we think the risk reward is attractive. Looking out to the second half of next year. For the sector at large, as you said, I think the end demand is decidedly mixed. With consumer continuing to show weakness, but the silver lining is we're beginning to see some upturn in Europe and some signs of uptick in China. So net-net, I think slightly a bias towards the positive side.
So Ashok, does this mean that you're going to have to review your rating for Intel shares?
No, I think absolutely. I think it's a key player longer term in this PC ecosystem as well as emerging smartphone opportunity. And very deep management, very strong execution. It's just the macro headwinds that's preventing the stock from moving further near term.
Daniel, you heard what Ashok said about mobile computing as well as the smartphone business. Is that really sort of going to Intel's strengths? Because they've been talking about getting into that business for a long time.
That's actually tough. I mean, when I think about Intel's strength, I think about the product cycle and high performance computing. computing. Now, the more iPads, the more smartphones you have, you actually need more computing power in the cloud because it's not the devices that are actually running the programs. You're shifting more computing power into the cloud.
Explain for people what exactly is this cloud,
Sure,
this idea that a lot of the applications, a lot of the actual running of computers takes place in these data centers somewhere. How does that get connected?
That's exactly right. I mean, when you have a smartphone with a relatively low-powered processor, it doesn't have the same computing power as your desktop does, for example. So you really want to have a computer remotely where you can offload your programming to. That's what is, or the servers based in the data centers that are going to run the programs, and those are powered by predominantly Intel-based products. So the flip side of that is that Intel doesn't have a lot of devices in the mobility world. They don't have a lot of market share. That's primarily going to ARM-based smartphones. So there's been a lot of worry that as we go to smartphones, we're going to rob from the desktop. That will certainly happen. I think that's a couple years out still. I think that the near-term cycle is really adding to the servers, adding to the data center. That near-term is good for Intel.
All right. I want to thank you, gentlemen, very much. Daniel Berenbaum coming to us from Auriga USA, sharing your thoughts on Intel, and Ashok Kumar coming to us from Rodman and Renshaw is going to be reviewing that rating on Intel.